The biggest issue is that there's more spending than we have income, and that's a problem. So then the question is, where are you going to get the money from?
With a remarkable history of studying economic cycles and accurately predicting the 2008 crisis, Ray Dalio's warnings hold weight. Today, he's back with another warning.
I mean, these things happen over and over again. We're now in the 12th and a half cycle. You know, these cycles, you know how the cycles work. You're 12 and a half cycles since 1945. 1945 was the New World Order, you know, new monetary system. And you know what happens. So let me take you through it quickly. You get a funky economy, weakness, and so on. So what we had, of course, in 2020 with the combination of COVID, and then also the move from the right to the left. There was a distribution of wealth. And so how did you do that? The government had to send out a bunch of checks.
Yep.
And the Federal Reserve, where did the government get the money from? The Federal Reserve lent it. So we have an imbalance. And of course, that put a lot of money in the system. You've got the demand, you've got the cycle, classic cycle, right? Stimulation, credit becomes debt, then you have inflation, then you have a tightness of monetary policy. And so where are we? So we now in a classic spot where we've got a relatively high real interest rate. Real interest rates went from minus 175 basis points to plus 175 basis points, right? You've got a cash rate that's relatively high. Cash used to be trash. Now cash is relatively attractive.
The mounting national debt of the United States calls for concern. The government printing more money to pay off this debt is a dangerous tactic posing as a solution. It carries the looming threat of inflation. We are potentially heading towards a destabilized economy that could have devastating consequences on the country and its citizens.
The classic movement, of course, as rates go up and money becomes tight, you lose the parts of the economy, the parts of the market that are the bubble parts that needed the cash flow, right? So you see the tech stocks come down, all of that come down. You see private equity, you see venture capital because they needed cash, all of that comes down. So you could see which sectors are going down. You could see which stocks are going down, right? You see the tech stocks, you see real estate going down. Residential real estate goes down, and we're having something close to a let's say a stagflation, meaning maybe 3.5. I think you're going to see inflation come down to this, and then because of the way it's calculated, it'll go up a bit. And so you see that kind of an environment with something close to maybe a 1% growth rate, something like that. But I think that this type of recession is not a bad recession. It's a lot less bad than I thought it would be because of the fact of how it's distributing and shrinking that credit. At the same time, though, we have a real issue for the United States debt in the world because we're selling all this debt. You know, if you look at wealth, instead of GDP. Wealth is a much better indicator of things. GDP is like looking at revenue. How much did you sell? We have borrowed a lot of money, okay? And now we're having a problem selling that money around the world. And it's also happening that this political situation, geopolitical situation, is weakening the demand for U.S. bonds. The biggest issue is that there's more spending, and I would say there probably needs to be more spending than we have income. And that's a problem, right? Governments run the same as your household or a business in that, with two exceptions. They can print money and they can tax, right? So then when you spend more than you earn, the question is, and they're going to spend more than they're going to earn, where are you going to get the money from? Are you going to get it from taxes? And if you get it from taxes, people fight because they don't want to give up their money. Or are you going to get it from printing the money? And so how do you achieve that balance? Because do you spend less? Well, it's a tough environment to spend less. You have to spend more on defense. You have to spend more on rebuilding. The Green Initiative is expensive. I mean, education is expensive and so on. So there's a dilemma that she is sitting in, that we as a country are sitting in. So, how do you solve that problem? I think that, if you were to, let's say, take the bigger picture, there's a lot of things that you can invest in that will produce returns. And I think, for example, I don't think we invest nearly as much in the basic things like great education and making sure that certain areas do not have conditions that are substandard conditions. And so to invest in those things that are going to produce productivity. Education's a good thing. Infrastructure's a good thing. Other things. But this is part of a cycle, a big cycle that has happened over and over and over again. I think the markets as a whole they were obviously, I would say, the interest rate changes were obviously had to come. The impact on the other markets had to come. They have come. They have been into the price. So now you're going to have probably a tightening or a tighter monetary policy than existed. And that's a net negative for the stock market, but not in such a big number that it's like a big bearish thing. So when I look at the market as a whole, I would say, okay, well, now it seems closer to fairly priced, probably still a bit high, given that whole picture.
Power dynamics are shifting. New global powers are rising, notably China and Russia. These rising powers pose a threat to the U.S.'s long-standing dominance. The economy's stability is increasingly uncertain. There's only one thing left to do: prepare for the worst.
The same things happen over and over again through time for basically the same reasons. A lot of these things happen once in a lifetime. If you don't go back and see how they worked over time, then you're in trouble. So there's a pattern. I could describe the pattern, but there's a pattern that happens over and over again, and we're in a particular spot in the pattern. And then to understand it, not just because it happened before, but to understand mechanistically how it happens, and then one has a sense of how to deal with it. Just like in 1929 to 1932, there was a debt crisis that came as a result of an excessive amount of debt in the boom years. And then when you have that in 1932, we hit zero interest rates. And when they hit zero interest rates in 32, like in 2008, central bank prints money and buys financial assets. And so what happens in these cycles is that normally central banks can stimulate the economy by lowering interest rates. But when you hit zero interest rates, that doesn't work. So the last time it hit zero interest rates was 1932. And what they did in 1932 was the same thing they did in 2008. And that is that the central banks prints a lot of money and buys government bonds. And so we're doing that now.
And just to be clear, the reason that they're doing that is so somebody has bought a government bond. The government is basically saying, hey, you, dear person, lend me the money. I'm going to build something, roads, whatever, but I'm going to pay you back in a year, 2 years, 10 years, whatever, plus interest, I would assume. That makes it worthwhile. And the reason that the government is going in and buying those is to get back liquidity to the people that have loaned them that money?
Yes, because think of it this way. The central government, and also companies and individuals, don't have the capacity to create money. So the central government has the right to determine they can tax people, they can get money from people, and they can spend money on whatever they want to spend money on. But they don't have the right to print money and create money and credit like the central bank does. Central bank is the Federal Reserve. Similarly, the Federal Reserve does not have the right to spend money and determine how it's spent. That's for Congress. Every individual, every company, and every government has a certain amount of money that comes in the form of income, a certain amount of expenses, then a certain amount of savings. So you do individually, and all your listeners do. And it works the same way for everyone, so that if their income falls to be less than their expenditures, they're in trouble unless they have a good savings. And then they go to the savings. So all around the world, there are lots of entities that are in trouble in that way. So the government, the two parts of the government, the U.S. government, two parts, want to give checks to people. Now, it's difficult to decide who gets it, who doesn't get it. But if they don't give checks to people or to companies, those will go bankrupt because they may not have enough savings. So you saw J. Crew went bankrupt, just went bankrupt. And you'll see others go bankrupt because they don't have enough. And so when they go bankrupt, then that's a whole other process. So in order to prevent that, they have to give money. And so they print money. We call it print. There's not even paper much. It's digitally create money. And then that comes in the form of loans.
Okay, so basically they're digitally creating money, which they're allocating to the government, and then the government is deciding how to disperse those funds?
Yeah, the Federal Reserve will buy government bonds, so it's a transaction of buying it, and they will also buy private bonds. They might pick a company, many companies, and they'll say, I will buy your bonds, which is the equivalent, I will lend to you. And that's happened through history. So what we're going through is the same process as happened in the 1930 to 1945 period.
So what can the average person take away from that? They don't have bonds. They don't think like that. They may not even understand what their 401k is, or they may not even have a 401k. How do they navigate this? Is it just head down, do your best to weather the storm? Or is there actually something that they can learn from the historical perspective and move on now to make this easier for them?
It's the same for every individual, same for every company, same. And if you understand this, then you understand. There are three things. The first is look at your income, your expenses, and your savings, and then do a stress test so that you get yourself secure. If you were to lose your income, or if the income were to fall beyond a certain level, and you play that out, maybe that means you go get unemployment insurance or whatever. How long can you live in an acceptable lifestyle? And do you have a saving that is adequate for that? Okay, so what you do is you calculate, if I lived in a simpler lifestyle, I had this amount of earnings, how many months or years could I live acceptably? Then you look at your, what do you put the money in?
What countries or what periods of time has going through this kind of crisis been managed well so that we come out the other side with as little sort of pain and suffering as possible?
Well, an example of would be the differences in the way Roosevelt did it. So again, 1929 to 32, interest rates hit zero, they print money, we had a large wealth gap, and then they sat down and they figured out how do we keep it orderly and how do we change the circumstances with whether it's taxes or how do you reorganize it so that the system works well. There is a risk also at the same time because the world is going through that. There's a risk of conflict. So in Germany, Hitler came in power in 1933, and he came in power in 1933 because there was a lot of internal fighting as to try to produce order, because everybody, the left and the right, the communists and the fascists, and they're all fighting about wealth, because everybody's fighting about wealth when you have a downturn. And then they were democracies. 4 democracies existed then that chose not to be democracies because they became so disorderly that they wanted some strong leader to take charge and run the country. And then, of course, we had a bunch of those types of leaders, and then they had a war. That's how World War II happened. So when you look at that, that's kind of the political landscape. But back to the average man in terms of his finances, I would say the important thing is those 3 elements: to have a plan, and maybe to have a plan with both your family.
Think about that. What's the importance of education we start thinking about protecting successive generations? How much of that comes down to education?
Education is the most important thing. I was raised with a very modest economic background. My dad was a jazz musician. My mom was a stay-at-home mom. But I was lucky to have parents who cared for me. And I went to a public school. I got a good education. And I came out to a world of equal opportunity. And I believe that those are fundamental necessities, that you have to know how to have an education. Facts like you have to know how to read, write, and arithmetic, but you also have to know how to behave well with others, to be a good citizen, operate in a civil way, to be able then to go into jobs. That education can be anything that works. I think the big thing is, three big things on what I think work should be. Make your work and your passion the same thing and make it economic. If it works, that you love your work, you'll probably be better at your work. And then you find so you want those things, and then there's the economics of it. So it could be anything from learning trades, whatever it may be. Education certainly does not have to be college. College is overemphasized.
As this next 3 to 5 year part of the cycle hits us, what is one thing that people can do that from the historical perspective will most insulate them from the probably emotional and maybe financial damage, whatever you think is more important?
The things that I thought about, some of the things I mentioned earlier, the plan for the worst case scenario and make it terrific is one of the things. The understanding how to triangulate well to deal with whatever problems that you're going to face and how to work that through to find the path and find your nature. But also one thing that's helped me a lot is meditation. Meditation gives you a calmness, an equanimity, so that you can almost look at your circumstances and you can navigate it with a clarity of thought without all of that stress. It's healthy because it reduces stress, and it also makes you smarter to make the decisions well. So I would say that would also be something that I would recommend. Because if you have the equanimity, that centeredness, that calm centeredness, and you have your plan, and you triangulate well with others so that you can get all the best advice and don't have to approach it in your own head, you're a long way there. The world order was made in 1945 at the end of a war. And a civil war can begin a new order inside of a country. The Chinese Civil War began their new order 1949. And so that's like a new beginning. They always come out of wars. And a war is a fight for how the system works. So we'll begin there. After the fight of how the system works, it's a great leveler. It gets rid of a lot of the debts and it starts over. And then there's a new power. In the United States, the New World Order, it was an American world order because the United States won World War II. It had 80% of the world's gold. Gold was money. It had the dominant military power. It had nuclear weapons. And because of that, we began the American world order. They carve up the world. Here are the borders. This group gets